Welcome to the jungle, you savages. My name is Baloo the Bear, and this is the Crypto Jungle, the only honest crypto channel in all of YouTube. If you're new here, we cover the crypto market from a macro perspective right now, and we get into the nitty-gritty when we're in a bull market. But in today's video, I want to focus on the macro environment. I want to take a look at equities. I want to take a look at the comparative analysis of equities against the crypto market. Take a look at Bitcoin, take a look at Ethereum, and I think that's it. So without any further ado, let's jump into the king of all crypto, and that is Bitcoin. Starting off with Bitcoin on the daily. So, oh, of course, my screen on my side freezes. God. All right, well, while I deal with that, let me just kind of explain what I'm looking at here for... Actually, you know what? I have to fix that. So my screen is not working. It's only streaming my screen. Strong start. There we go. All right, starting off with Bitcoin. So basically, we are in this descending channel, bouncing back and forth between this channel, and we're approaching the top end of the channel right here. So the move overall, the consolidation has been rather weak, showing a lot of characteristics of distribution, lots of up thrusts. Let's actually get down to some smaller resolution here. Let's take a look at this on the sort of the 12-hour, and let's zoom into that consolidation. So yeah, the price action is kind of non-committal, but what can happen in these types of circumstances, so do be aware. We can work ourselves through the supply. There's a lot of people willing to sell at the top and the end of the range, but we're not really revisiting the lower end of the range. So what that means is, you know, we could get a pop. We could get a pop out here, and I'd be looking at, you know, somewhere around this area, like we've been talking about for weeks. You know, 30K is a possibility. There's a lot of resistance in front of us here. There's resistance in front of us here. So I still don't think we're out of the woods yet. I think that this is still a macro downtrend. It's still a bear market. We have lower highs and lower lows. So until that changes, until we get any sort of adjustment on the macro, the assumption is lower levels until we can, you know, prove a bottom somewhere. And it would be nice to have a consolidation that was showing characteristics of accumulation, but this one consistently shows characteristics of distribution. You can see kind of the up thrust, lots of wicks in this general area as well. Like I said, it could be coiling up and we could get a break up to the 30K level, but ultimately the entire consolidation is bearish and not showing the characteristics that I like to see that shows me that smart money is buying. Dumb money is buying. Retail is buying, and we can see that in the altcoin space. Altcoins have been kind of popping off randomly. It's popcorn season. You're getting bullshit illiquid coins pump. So retail is definitely in control, and when retail is in control, you're not going to make any money. You only make money when smart money is in control. Smart money is not buying. Smart money has not accumulated any sizable position as of yet, in my opinion, based on what I'm looking at in the macro trend of this chart. So, you know, proceed with caution. Let me get rid of some of these drawings, and of course my screen went away again. God, I gotta figure out how to fix this. Apple, I know you're watching my streams, Apple. Fix your sidecar software so that it stops disconnecting to my laptop, disconnecting from my laptop. All right, what do you guys think? Are we are we gonna get up to 30K? Are we gonna break out of this consolidation? That's the kind of catch-22 about a bearish consolidation, is if a bearish formation breaks bullish, it usually breaks bullish quickly. You get a lot of short liquidations and stuff, so you get a cascading effect to the upside. Do you think we're just going to stall here, fail, and break down out of this consolidation, or do you think that we're going to break up and at least test the 30K levels that we're watching? Let me fix my screen while you guys are deciding that. Apologies for the technical difficulties here. All right, stay connected. Stay connected. I think the market might a bit the dust around the merge. How come I'm not getting these messages? Am I in the wrong dashboard? Probably. There we go. That's better. Now I can see the chat. Okay. Hopefully that's the last software interruption. I think the market might bite the dust around the merge. I think that it's absolutely plausible. The thing is that the ETH merge narrative will cause speculation, and usually anticipatory speculation, especially something with a bullish narrative, will rally into it. So I wouldn't be surprised if we break out here. I wouldn't be surprised if we go to the underside of 30K. I wouldn't be surprised if ETH, let's actually just pull up the ETH chart. I wouldn't be surprised if ETH kind of continues to rally with anticipation of the merge. Oh, you gotta be kidding me. You broke again on me? Okay, well, this is ridiculous. I'm gonna try and do this looking through my editing software, which is not easy, but... Ay. Software is not wanting to cooperate today, which is really annoying. Really annoying. Okay, let's try and do this way. So, you know, I wouldn't be surprised if we kind of got a retest of this general area right here on ETH. But ultimately, I think you're right. I think there's a lot of people very excited for the ETH merge. They think that the merge is going to solve all the problems, but the problem is we're in a bear market. There's low demand, period. End of story. There's low demand for crypto. Another way of saying that is the world, no coiners and everybody else, doesn't care. I think you can really boil down a bull market versus a bear market in very simple terms. A bull market is new users coming online in an accelerated form. So because we don't have your friends, your family, your acquaintances asking you about cryptocurrency and how to get into cryptocurrency and what crypto projects to buy, nobody's doing that right now. We're in a bear market. When the trend takes over and you have new users coming in every single day, you have a ton of demand. Now, there's a huge expectation with the ETH merge that, you know, ETH is going to be better, so everybody's going to come back in. And I just don't think that that's a reality. Like, people, newcomers, don't even know what the ETH merge is. So what's going to end up happening, in my opinion, is we're going to maybe rally up to the merge. The merge will happen, and best case scenario, nothing happens. People get impatient, they get bored, and then the ETH price starts to tank. And where we can look for some of these areas for, well, I've already had the box marked here. So we're looking at around $500. I want to see $500 get retested on ETH. So that's kind of what I'm thinking. Nothing, you know, has to happen. And when you're in a downtrend, the trend is your friend until it ends. So ultimately, if the macro trend continues, meaning if this a rally goes to a reaction that breaks the low, the place that it concludes, like the structural, the logical place would be here, but in a market panic, the market's not logical. So it can go to 300, it can go to 250. We don't really know. What we're looking for is we're looking for some sort of structure to kind of, you know, show at least a double bottom. A double bottom is the beginning of a trend change. Okay, a double bottom, it doesn't have to be a double bottom, it can be an inverse head and shoulders, whatever you like, but we do need some sort of multiple test areas to even consider a trend change. And as it stands right now, we don't have that. So the assumption is lower levels. So yeah, I'd be looking for rejection somewhere around this area potentially, which would correlate with a move in BTC around 30K as well. But yeah, I don't think we're out of the woods yet. I don't think the smart money is buying. I think dumb money's in control. And yeah. Okay. Going down tomorrow, says Andrew Nitfield. Yeah, I don't know. Why tomorrow? I think it's, yeah, we'll see. But yeah, that would be nice. If the USD falls / drops in value, will BTC and other cryptos drop as well? Your thoughts on when will crypto unlink from the dollar? Well, that's kind of a confusing question for me, B-Man, because what we're looking at is kind of, you know, Bitcoin on the dollar, right? Bitcoin doesn't have a price. Bitcoin has an exchange rate. You really need to, like, this isn't an equity, this isn't a stock. You know, Bitcoin doesn't have a price, okay? It has an exchange rate. So its relationship with the dollar, if you're looking at a dollar chart, you're never going to get rid of that correlation. If you're talking about the DXY performance, which you could be, let me just pull that up. The DXY is the performance of the dollar when compared to, you know, other. Come on, man, really having software issues today. It's pissing me off. Anyways, the dollar, if the dollar is falling, typically it means that we're going back to risk on. So equities will be risk on. Let's take a look at the S&P. Equities will be risk on, so we could see a move in the S&P, maybe back up to the top of this macro trading range. That's a possibility. But it's never going to be decorrelated with the dollar as long as you're looking at the Bitcoin dollar chart. But Bitcoin is a currency, So depending on where you are in the world and depending on the currency that you use or the currency that you're willing to trade for the opportunity to get more of that currency with Bitcoin, the relationship is set. You know, most of the market, at least globally, we still use the dollar as a reserve currency. So you could potentially argue that, you know, if we stop the reserve currency, we can stop the correlation. But it's its own thing. It is tied to traditional finance and the performance of traditional finance. And what's required to have that go away, I think I'm a little too close to the mic, is a crash. You know, like a stock market crash. Right now, we're kind of tick for tick with the S&P. We're tick for tick for the NASDAQ. You know, we move lockstep with traditional finance. And to decorrelate from that, I think we're going to need to see a really, really large shakeout in equities where cryptocurrency recovers first. So I do think that fundamentally blockchain it has more opportunity in it than the equities markets. But right now, while times are, you know, quote unquote good, they're not terrible, they could be worse. We're just going to follow that path. And what we need to decouple is we need equities to crash and then flatline and crypto to actually take off first, because what that's going to show is it's going to show a comparative analysis between the crypto market and the equities market, and it's going to show that crypto is fundamentally stronger with higher demand. Speculation. I mean, we'll have to see what ends up happening, but yeah. Loving the vibes. I'm new to the channel. Any opinion on BTC not breaking 24? Well, welcome to the channel, Aiden. We're just kind of waiting to break the macro trend. Nothing's changed on the macro. We're still lower highs and lower lows. So yeah, you know, not getting above 24. The consolidation is mediocre. It's not showing a ton of strength. There's a possibility we get up here, but given the context of the strength here, the declining volume, the declining interest, and the fact that crypto's in a fucking bear market, let's not forget that fundamental. Crypto's in a bear market, there's going to be a lack of demand. It's not surprising if we kind of curl over and head to the downside. So thoughts on not breaking 24K? We're in a bear market, man. Shit goes down. Shit goes down in a bear market. C'est la vie. All right, let's take a look at what do we got here? Yeah, no worries, Aiden. Let's take a look at Cardano. Do a few shitcoin bingos. And if you guys have any tickers that you think are performing well, let me know. Anything on the front page is, you know, it's all working together. So it's all moving together and it's all doing poorly. Cardano. Time for shitcoin bingo. Thought on I'm assuming SHIB. So yeah, that's actually a good topic. So let me just quickly cover Cardano, and we'll use the alphanumerics indicator. Currently above the 7, not holding a ton of conviction, really steep drop off in volume. So, you know, there's not a lot of demand. So it's just going to take time. It's going to take time. Everything's going to take time. So Shiba Inu. Shiba had a big move and everybody freaked out thinking that the bull market's back on. But what new investors and new traders don't understand is how price is made, and the concept of an order book. A lot of people think money goes in equals number go up, and it's not really that simple. You have on the exchange, you have what's called an order book, and it has a list of bids and a list of asks, okay? Buyers and sellers. When a buyer is matched with a seller, you have a price. When there's low participation, you know, in a bull market, you might have thousands of orders, thousands, maybe tens of thousands of orders in the order book sitting ready to waiting to go. That's what's referred to as book depth or liquidity. And when the book is full, the spread is low. And this is, you really need to understand this, okay? Because it will help you a lot. When the spread is low, you're going to have more correct price. You're going to have a correct market price because, you know, Bitcoin might only go up or down a few dollars at a time when the spread is tight. In a bear market, everybody leaves. Everybody leaves, okay? So the books become super thin. And what that means is, in the case of Shiba Inu, I'm not going to use its tickers because it's too many zeros, but let's say you have an order book where you have a price of SHIB at 1, or in a bull market, you'd have 1, then 1.001, then 1.002, then 1.003. You know, you get a really, really tight spread. But when you're in the bear market, you have one bid at 1, the next bid's at 2, the next bid's at 3. So you can see that the spread is actually massive, huge, huge spread. So it only takes a tiny bit of money to move the price a lot. And that's how you get these big, massive spikes. And sometimes you'll see it where you get a huge spike and then immediately crash back down. A good example of that, let's actually take a look at Celsius. You know, Celsius did it right here. See this huge wick? So what happened is somebody came in with a buy order on a very thin order book. So because it was on a very thin order book, boom, price goes way up. But the price is incorrect. It's an incorrect price. Price is very correct when there's a ton of volume, when there's a lot of liquidity, when there's a lot of orders. So what happens is you have arbitrage traders trading Celsius between all of the different exchanges, and they knock that price back down. They knock that order book price back down because they even it out across the exchange, across, you know, get it back to its true price. So when things like that happen in SHIB, everybody gets super excited and they think the bull market's back on because we had a fucking 40% candle in a weekly candle here. But it's just because the price is liquid. The assets are liquid. There's no value. There's nothing going on here. This is just a thin order book with dumb money. That's it. So we'll have we need some sort of accumulation period, and that's just not happening. Also, when we look at the RSI here on the weekly, where are we? We're at the rejection zone of the 50. So if we can get above this, then maybe we can rally, but I have no confidence whatsoever in a high risk asset like Shiba Inu being able to sustainably rally in the way that Shiba Inu holders are expecting. AKA bull market face melting move, fucking number go up, let's fucking go, all that shit. It's not gonna happen. Rose ICP. Yeah, we can take a look. Rose, man, ugh. You got stuck with a bag of that or what? Algorand, okay. Do you think day trading crypto is better than traditional markets? I think that there's more volatility in the crypto market for sure. So if you have the talent and capacity to capture volatility, which is a very small percentage of people, by the way, but if you have the ability to consistently, on a daily basis, capture value, all you're looking for is volatility. So yes, crypto would be a better place to day trade. The thing is, it's also very volatile, so your risk needs to match that. They're both highly profitable. Any market is highly profitable for a trader that knows what they're doing, because they're not after, they don't come to crypto because crypto does 100x. They do crypto because they're able to be get into a position for shorter term. Once you define the risk, it doesn't really matter what asset you're trading. It doesn't really matter what market you're in. If you have a very strict trading plan with very calculated risk to reward calculations on that, it doesn't matter. You're playing with the same bag, just in a different asset. So yeah, if you know what you're doing, I would hazard a guess, and I don't know you, but I would probably say, if you're asking this type of question, you shouldn't do it. You should not try and day trade crypto. Just because you asked some guy on YouTube, that's why. Traders who know what they're doing can extract value from any market, and they can do so consistently without worry, and without asking if one market is better than the other, because they're all the same in that context. In the context of day trading, they're kind of all the same. There are some nice things that you can do in crypto. Crypto has a very robust futures market, but it's a good place to lose your money, just like any market. Money printer is going to print again. Mini bull run. Where are you getting that info? The money printer's gone? If the money printer goes again, then yeah, there could potentially be, a dead cat bounce, a zombie rally. So yeah, if they start to introduce a fuel credit or a food credit, which is basically a, universal basic income. If places like the US start to introduce something like that to, help people with, the price of fuel and whatnot, then yeah, but I haven't heard anything. I haven't really been listening. So if you know something I don't, that's, let me know. But I don't know that they're turning the money printer on. The Fed is in a tricky spot. What the Fed has to do, what the Fed needs to do, but is dragging their heels on, is they need to stop printing and start raising interest rates. I don't think people realize, the primary purpose, the number one purpose of the Fed, primary above everything else, it is not to keep the economy up. It is not to keep politicians rich. It's not to fund fucking military. It's not to do anything next. The number one purpose of the Fed is to protect the dollar and keep the dollar as the global reserve currency. That is it. That is the number one priority above every fucking American citizen, above every country or politician. Their number one goal is to make the dollar strong. So they're in a tricky spot because the dollar's not strong and we're not economically, in a position of power, speaking about the Americans. So what do they have to do? They have to stop printing and they have to start raising interest rates. What's that going to do? It's going to hurt the economy, but that doesn't matter. The Fed's not here for the economy. The Fed is here to balance the power of the dollar as the reserve currency of the world. If the American economy needs to suffer, they will do that. Their number one priority is the dollar. Fed can't raise interest rates that much, otherwise the US will go into a debt spiral. They don't have a choice. They don't have a choice. And no, I don't believe that it'll go into a death spiral. I think that there will be turmoil, there will be volatility, and there will be a significant deleveraging event. But as long as the US remains in power in terms of the trade currency, the world trades on the dollar. Doesn't matter what country you're from, the world trades on the dollar. As long as that remains to be the case, as long as every other country sucks more in terms of their monetary policy than the US. The US can have a terrible monetary policy. It just has to be better than everybody else. If that is the case, then, you know, they're going to do what they're going to do. But yeah, man, like the Fed doesn't have a choice. And the Fed also is kind of its own thing, right? It's not the US government. So it's interesting times, man. There's a lot of ways to look at this. But ultimately, the Fed is trying to defend the dollar. And that is an easy statement to say and something that is incredibly complex and hard to pull off. Ultimately, they need to start raising interest rates into uncomfortable levels that are really going to hurt the equity market. But they have to. They have to hurt the equity market at this point. This is why we have a boom-bust cycle. We have a boom and bust. A fractional reserve system is a boom and bust system. So you get to the top of a boom, which we have. We've been on a 12-year rally. It's been an incredibly economically prosperous time for the last 12 years. Whether you feel it or not, it has been. And it's time for a bust. So, you know, we always come back from the bust. I think we're, you know, setting up for a bust. As far as I can tell, the US dollar is still stronger than any other currency currently. Yep. And will my DXY chart show up? No, it won't. Yeah, it's still doing just fine comparatively. Okay, let's take a look at some of these other shit coins here. All right, what did we have? How am I doing for time? Yammering on too much. You're correct. I've been trying to day trade and I'm a professional at losing money. Hey, thank you for your liquidity, sir. We need your service. You guys make the market go round. It's not impossible. Everybody wants to be a day trader. I'm not a day trader. I'm a swing trader. I'm a position trader. I'm a macro, and I'm much more of a short-term swing trader in a bull market. But in a bear market, no. The market's it's not giving. You have to be willing to receive when the market's willing to give. So, you know, timing is really important in how you conduct yourself in a market. And when you're in a bear market, it's best to be conservative. Preservation of capital is number one. That way you have capital when it's time to go. Okay, where am I? What am I looking at here? Algorand. Algorand is a really shitty coin. As far as market opinion, but there's a lot of VC backing here for Algorand. I don't really know its place. It is starting to kind of pop up in the play in the gaming sector. I don't know how profitable a sector gaming is going to be in terms of crypto investment. It's not really a sector that I know very well, if I'm being perfectly honest. I mean, I kind of fell into play to earn with Axie Infinity, but I'm not a gamer. I don't have a good finger on the pulse of what's going on in the gaming world. This chart looks like shit. You know, it went a whole bull market without doing anything spectacular, and now it's right back down to where it was before the bull market started. So it's shit. It's shit. Speaking of shit, let's take a look at Rose. Look. Blech. Okay. ICP. That was the analysis, by the way. Just me gagging a few times. ICP, node-based internet. So this is something that that's been tried countless times. Substratum. What was some other node-based? Long story short, node-based internet has no incentive There's no incentive. Nobody wants to keep a node-based internet. There needs to be some sort of economic incentive. If I'm going to run a node to keep a decentralized version of the internet up, why am I going to put electricity and resources towards that? There has to be a reason. And ICP's whole thing is it's just really easy to, you know, do protocol updates and really easy to install applications on this version of the web. But if nobody's going to keep up the web, there's no point. It doesn't matter how great it is, doesn't matter how easy it is, doesn't matter how, you know, easy it is to plug in all of these different applications, because the protocol itself has no maintenance. Nobody is incentivized to upkeep the protocol itself. At least we haven't figured out a way. We're going to figure it out. I know we're going to figure it out. My personal belief is that we learn to incentivize the decentralized web with Bitcoin. But I'm a fucking Bitcoin maxi, so of course I'm going to think that. Bitcoin maxi that plays with shitcoins. ICP, I think it's fundamentally just shit. It's been done, it's been tried, and it didn't work. Okay, what else did we get? Chili's. I'm not going to touch Chili's right now. I'm running out of time. Are there any assets worth accumulating right now besides cash? Depending on your time parameter, Bitcoin. Bitcoin, you know. Now, when you say accumulate an asset, what are you actually saying? You know, because there's traders and there's investors. A trader trades assets for money. So if what you're trying to get is more of your local currency, more of your local fiat, then you're looking to trade. And if you're looking to accumulate assets in your life, then you trade money for assets. If you're looking to accumulate assets for your, you know, portfolio of assets, now is a good time to buy Bitcoin. In the long term, you know, like an asset that you want to hold long term, yeah, Bitcoin can drop. Bitcoin can absolutely drop. It can drop below 17. It can drop to much scarier levels than that, or the bottom's in. We're in the accumulation zone, in my opinion. The thing that people struggle with is, you know, the Bitcoin accumulation zone right now is potentially anywhere between $5,000 and $50,000. That's hard for people. That's hard for people to understand. That's hard for people to be willing to buy, because they try to time the fucking market and they try to hit the bottom. But if you're looking to accumulate assets, there isn't a harder asset on the face of the fucking planet than Bitcoin. So if you want a hard asset, start DCAing into Bitcoin. I don't know anything about Rose, by the way, but I know that 99% of crypto is a scam. 99% of crypto is a scam, and 1% of crypto is people actually trying to make something. Smart contracts coming to BTC through ICP, supposedly. I don't fucking know. So that's interesting. That's interesting. I'm going to have to look into that. Because but it does nothing for this is the thing. If you want people to do something, you have to pay them. Duh. If you want people to, you know, right now the internet runs on servers. You know, Amazon has countless servers, Google has countless servers, and they own the hardware. They have big fucking warehouses with supercomputers running the internet, basically. And what we want to kind of take the internet back is we need a decentralized internet. And we already have kind of a pet project, a passion project called IPFS, the Interplanetary File System. It's what all the NFTs run on, like it's all IPFS. So we already have a decentralized internet. I'm going way over on time. We already have a decentralized internet. The problem is, for you to run a node on the decentralized internet, you just need to want to do it. You just want to do it because, you know, we should have a decentralized internet. So the IPFS system that we have right now, which is different from HTTP, IPFS is just nerds, you know, people with good computing power that is just like, yeah, IPFS is dope, I'm gonna run a node for it. So it's like the PBS of the internet. You know, people need to actually invest money and resources and electricity into keeping that up, and IPFS gives you nothing back except for the value of a decentralized internet. What we need to do is we need to figure out a way to run an IPFS node where the IPFS node can pay you. And I think that we can do that by figuring out a way for the IPFS to capture microtransactions, just a few Satoshis of Bitcoin, and then redistribute that Bitcoin to anybody who's running an IPFS node. This is something that, you know, this is what ICP is trying to do. This is what Substratum is trying to do. This is what, like, all of these other things are trying to do that, but they're trying to incentivize you through a token that they made up. And the token has no value because they just fucking mined it. It has no value. You can't use it anywhere. It's just a token that you're paid for running a fucking node. But Bitcoin has value. Bitcoin has proof of work. Bitcoin has a community. Bitcoin has acceptance. It has point of sale places that you can spend it. So it already has kind of value built into it. So what you need to do is you need to create an application that captures some of that value and then redistributes it to those who are upkeeping the nodes, those who are running the nodes and upkeeping the network. And we haven't figured it out. I think we can, and I think we can with Bitcoin. But I don't know what ICP smart contracts coming to BTC through ICP supposedly. Okay, so now I understand what you're saying. ICP, but here's the thing. The token for those contracts is going to be ICP tokens. So this is a desperate attempt by ICP to try and monetize their layer. I prefer Liquid. So Blockstream's product Liquid Network. Liquid, let's actually just pull it up here. Let me show you. Blockstream is the core dev team of Bitcoin, by the way, for those who don't know. And they have Liquid Network. Okay. So Liquid Network is going to be a side chain for Bitcoin DeFi and Bitcoin smart contracts. Why I like Liquid Network, why I prefer Liquid Network, is the gas token is 1-to-1 BTC. So you create really strong backing, really strong value, and you create a consumable on a side chain. ICP is doing the same thing. There's other ones like Taro doing the same thing. There's another one called RGB doing the same thing. There's another one called... there's a whole bunch of them trying to create DeFi on top of Bitcoin. But what they all do, every single one of them, is they launch their own token, their own free-floating asset. And that, to me, is a money grab. All they're trying to do is just get rich by deploying a line of code. And, you know, fine. You know, you have the skills and people are willing to do it. Why the fuck not? Sure, you can become an overnight millionaire by deploying a few lines of code. So I get it. The incentives are huge. The incentives are massive to try and do it with a separate token. But it's not sustainable. And if you really want something that's truly sustainable, you have to use an underlying cryptocurrency asset that has intrinsic value, separate from the utility token. The utility token has its utility. If its utility is to run gas for smart contracts, that's it. That's its only utility. But if your utility token is Bitcoin, it's also a cryptocurrency. You have a cryptocurrency that is accepted globally, offers protection from governments, is a payment remittance software, and it runs gas. It's a utility token. So I think it's far more beneficial to create applications where the currency already has backed value, and then you just add value to the currency by giving it more utility. And that's where I think Bitcoin's going ultimately, long-term, big picture, macro. I think that Bitcoin, it is already a cryptocurrency, and I think that we build utility on top of Bitcoin, and then more and more utility. Bitcoin is the utility token. So Bitcoin allows you to do this, that, the other, run this app, that app, whatever. And I think that we can create much more robust and sustainable projects that way. But that's just my opinion. Thank you, Steven. Hit the thumbs up, guys. Trick the algorithm. I do nothing to really optimize this channel. I want it to be word of mouth. I want, you could hit the like and YouTube will do something, but what's more effective and what means more to me is if you have friends that are just like, who do you follow? Get them to come here. All right. That is all the time I got. I got to get into the virtual classroom. I'm already a few minutes late for the virtual classroom. So thank you all for joining in to the live stream. It's good to see all of you jungle savages here today. We have 26 people watching, which is good for the bear market conditions. Doesn't sound like a lot of people, but during the live stream, that's not bad. So I want to thank you all for joining in. Hit the like. Don't forget to subscribe. Follow if you're on Twitch. And yeah, please trade safe. It is a jungle out there. Peace.